Okay, welcome into my Vanguard portfolio update. Now for the month of October, we are so close already to the end of 2025. I cannot believe it. There are Christmas decorations and Christmas food already in the supermarkets. Now, what about the stock markets? Have a look at those before we jump into my portfolio itself. As you can see on screen now, the S&P 500 up more than 3% as I at least make this video. We've seen multiple new all-time highs this month already, which seems to be a running theme pretty much throughout the year. Now that takes its year to date above 14%, and we still have 3 months left of the year. Now, what's interesting is this last quarter of the year does tend to be some of the most profitable for the S&P 500. In fact, just have a look at this, but most of the time, in fact, 78%, at least from 1950 onwards, the average increase during Q4 is 4.2%. So whether we get anything close to that would be an unbelievable year for the stock market. And when we go back just nearly 12 months, many people thought it was a guaranteed recession, thought things were going to go in the other direction. So it just shows how basically pointless it is to try and predict anything when it comes to stock market investing. Now, that was the S&P 500 in dollar terms, but as I want to continue moving forward with these portfolio updates, I also want to look at the S&P 500 from a pound perspective as well, because obviously as UK investors, we're buying everything in pounds. Just have a look up on screen now. You can see that actually the S&P 500 using a UK ETF is up more than 4% for the month, but year to date is almost 6% up. Now, this is a good reminder, like I said, just how much of an impact the pound and dollar exchange rate has. And when it goes in a negative direction, it's not good for us, at least when you're looking at it from a value perspective. When you're looking at it from a perspective of what you're buying and maybe investing, if you think it's going to go back to where it was previously, then you can look at it as a discount, but we never know the future. For me personally, in the long term, I look at it as a bit of a discount, but that's assuming it goes back to some kind of mean, some kind of average, but we don't know the future. Close to home, and this is a bit of a theme in this month's portfolio update, but actually stocks close to home and stocks also in emerging markets have done pretty well. Have a look now on screen at the FTSE 100, representing the 100 biggest and best companies we have listed here in the UK. Up 3% for the month, so having a really good month, but also a really good year. When you have a look at the year-to-date performance of more than 15%. So pound for pound, if you went all in on the FTSE 100 this year compared to the S&P 500 using your pound sterling, you'd be doing pretty well right now. So finally, this makes a change. The UK is actually doing pretty well from a market's perspective. Jumping into the news and some of the biggest stories going on in the US at the moment, you can see at the moment that the US government is completely shut down. They haven't agreed a budget, so at the moment all federal workers are basically on furlough, other than those who are absolutely critical and in need. Things do continue on somewhat normally. That's 750,000 people that basically don't have anything to do at the moment until a budget gets passed and they actually know how much they're going to get paid. Now, an interesting thing that I took from this story was actually the markets have seemingly not really done anything to this news. They've pretty much ignored it and continued on as normal. Pretty much every asset price has been going to the moon at the moment, which is a bit of a theme as I continue on going through some of the updates. So here's the big one, is pretty much all asset prices are through the roof, and that's including the stock market as we've just seen now, but also gold, Bitcoin and other assets are at all-time highs and making new all-time highs pretty much every day, if not every week at the moment, which is a bit of a strange relationship. Typically, we might see a poor stock market and then a positive gold price, for example, of people trying to hedge their bets and get away from a weak stock market and a weak dollar. But at the moment, we have stocks basically going to the moon, but also other assets and other hedges wanting to avoid that dollar seemingly as well. So the likes of gold and the likes of Bitcoin. Gold especially has been on a complete tear at the moment over the last few years. The charts look really good for it as an asset. If you did happen to go all in and decided to go heavy on gold, you've actually seen gold pass more than $4,000 an ounce at the moment. So make sure you check your drawers if you do have any gold lying around. It might be a good time to sell those gold sovereigns which you used to wear all on your fingers. Having a look at the performance of gold in the past month, it's almost 17%, and the 12-month chart is showing more than 50% as I record this video. That's some incredible returns in just 1 year. I did see an interesting article talking about the price of gold. Institutional investors do think there's loads of just FOMO out there from the institutional client base who want to buy gold. They feel like they're losing out, and they're being asked to make sure they have gold in their portfolios, which could potentially just drive up the price more and more and more. However, as with all of these things, there has to come a point where too much is too much. You can't grow 20 or 30% every single year because the law of big numbers has to step in. So where this one ends, I have no idea. We'll keep an eye on it. So S&P, or Standard & Poor, whatever you want to call them, the people who put together the S&P 500 and lots of other stock market indexes are creating a crypto index, which should show that crypto is working its way slowly and more so into the mainstream. This means that basically financial institutions and other investment houses can start to create ETFs, for example, that will track this index, and then investors can get a piece of that action by just putting their money into that ETF rather than owning different crypto assets themselves. Potentially this unlocks loads more funding, loads more finance, and loads more money to go into these ETFs without having to worry about the stress of managing their own cryptocurrency and buying things offline, etc. For many institutional clients, this is just too much. So I'll keep an eye on this one, see how quickly it grows. Certainly the ETFs over in the US, the Bitcoin ones especially, are one of the fastest growing ETFs to get to $10 billion compared to even ones that track the S&P 500. So I still think it's quite early days probably in this space. I did do a very recent video as well, which has gone very well on the channel. The last video I posted going over the ETFs, or the ETNs I should say, that are now live trading for UK investors from the 8th of October. I'll be doing a follow-up video on this one because I do think it's quite interesting for UK investors, just to figure out exactly what they mean for us, how we're protected, and what an ETN actually means, where the backing is, and how you can get the returns of cryptocurrency without physically owning any in that ETN itself. Next up, the AI boom continues. You can see here OpenAI, the company who runs ChatGPT and has lots of other partnerships going with some big industry companies, has said they're basically going to invest up to 10%, buy up to 10% of AMD through a partnership agreement. This sent AMD's share price absolutely rocketing, more than 30% over the past few days. There's lots of different partnerships that OpenAI has going at the moment, where basically they're committing to spend an enormous sum of money over the next few years, basically getting as much data center space as they can, getting access to chips from the likes of companies like AMD and the likes of Nvidia as well to run their compute. One interesting thing I saw, they're saying, really, remember, this company is still losing lots and lots of money. And although the revenue is growing, we're still a long, long way away from being profitable or generating many, many profits from AI itself. So this is a bit of an interesting time at the moment where companies like this are private, committing to spend which they don't physically have at the moment. And this could account for potentially hundreds and billions and maybe trillions of dollars worth of market cap in the future. The next headline I saw, which is quite interesting, just goes back to a point I was mentioning earlier about this currency exchange and how the fall in the weakening of the dollar has really changed the dynamics of investing over the past few years. And it's why lots of UK investors seemingly are quite frustrated at the moment, who have lots of their money in the US and buying these US companies or just US index funds, not seeing the same gains as their US friends at the moment, at least pound for pound. This article here was basically saying that since 2010, investors have lost 1.9% a year, which is a lot of money when you actually add it up, since 2010 because of that exchange rate. However, one thing I wanted to point out on this is that it's a bit of not a misleading one, but I would say investors don't tend to go all in on 1 year and then just leave their investments. As you are a regular long-term investor buying into the market multiple times over, you're always going to get a different exchange rate. So, and of course, when you actually need that money, it really depends on your position on this. The reason I wanted to highlight this was because lots of investors are mentioning this at the moment and saying, potentially, should I hedge my bet? Should I focus more of my money using hedged investments so I can avoid these, gains on paper not being as high? Now, my view is always, as a long-term investor, I can't control exchange rates. And if you buy any kind of hedged investment, you're basically betting that the exchange rate is going to go one way in your favor. I would rather just leave the market to, and as a regular investor who invests every single month, just if sometimes I'm going to get a good exchange rate, sometimes I'm going to get a bad one. It's exactly the same on the way out. So for example, if I was retired or wanting to take money out of my investments, sometimes I'm going to get a good exchange rate and sometimes I'm going to get a bad one. That's up for me to decide if I want to adjust my spending or my behavior at that point, but it's certainly not in my control. So I think it's an unwise decision to try and chase the exchange rates around. I think you'll be in the same boat as all those Forex traders who think they're geniuses trying to make money by moving the money around when most of them lose out. I think anyone who constantly tries to chase short-term gains is really playing a very dangerous game. Okay, let's have a look at some news close to home. I saw this story and thought it was quite interesting recently that the UK, Rachel Reeves anyway, is looking to try and reset the IPO business in the UK. At the moment, it's not looking very good at the moment. I'll put the stats up for you. The London Stock Exchange and the UK market generally is not a good place to list your company. At least that's the impression lots of people have at the moment. They prefer to go over in the States where lots of more money is slashing around. At the moment for 2025, the number is absolutely dire. You've got £178 million raised in 2025. At least that was for the first half. Just compare that to some of the years gone by, it's absolutely terrible. Now, why is this important to us? Well, we would raise a huge amount of money. The government certainly raises a lot of money when people trade shares on the UK Stock Exchange. They charge, stamp duty at 0.5%. If you've ever bought stocks directly on the UK, you will know how painful that is, because that's horrible, because that's money you never get back. So that's one of the possibilities that she could use, some kind of stamp duty holiday potentially for these different companies. But the difficulty we have at the moment in the UK is just, it's one of those things. If everyone views the UK as a terrible place to list your company, they're just not going to do it. And the less and less people that do it is going to encourage more people to not do it, basically. So I'm not really sure how we get ourselves out of this, but I did want to just highlight just how bad this is. And if you compare it to the US market, for example, we are so far behind. So I don't know. Any ideas you got, put them in the comment section below. Another story in the UK at the moment as well, which I thought was quite an interesting one with everything going on at the moment, with all the asset prices the way they are. I had a look here basically saying that more money has been ploughing into money market funds from UK investors at a bit of a record rate, which is quite an interesting one. As stocks are seemingly going to an all-time high, are investors here trying to time the market? Are they seeing that things are a bit too high and they're trying to be more cautious? Or, as I thought on the side as well, this could just be a natural move between people who are maybe looking to retire early, people looking to give up work. We do have a bit of an aging population in the UK, so maybe those people are putting money into money market funds while markets are really high and thinking, right, that's my safety net for the next few years. Let me know. I certainly think if it was the former and people were trying to time the market, I think that's a very, very bad thing to do. Retail investors, I think, have a very, very bad record of trying to do that. But I can see why you would. If you've made lots of gains potentially in some of the big stock names and you want to take some profits and put them in money market funds, that's fine. But then if you wanted to then get back into the market, I think that's a very, very difficult thing to do. Trying to time the market is so difficult because not only have you got to sell at the right time, you've got to rebuy back in at the right time as well. So when do you do that? The lows of the market, if we had a bad recession, could come in 3 months, 6 months, a year. So what do? Do you dollar cost average into a recession? If we had a really bad recession, I would almost bet that the same people would really struggle to put money in because you just wouldn't know when the bottom is. So trying to time the market is not for me. But I did think it was quite interesting seeing asset prices go up, but also investors potentially scared going into money market funds. Again, let me know what you think in the comment section below on this one. And then just very briefly, on a final note, I did a video on this one, but Bitcoin ETNs go live today as I'm recording this video, but in a couple of days' time, you'll see this when it goes out on YouTube. And that ban is now lifted. I'm going to do a follow-up video just going into a few more details on that one. It's an interesting one for the UK. Basically, a ban has been in place since 2021 for these exchange-traded notes for Bitcoin and Ethereum or other cryptocurrencies. Now that ban's lifted, we'll see if the market gets flooded with products and what the demand's like. I do think there will be a big demand from retail investors who especially want to get these inside of ISAs and pensions. But again, really interested in your opinion. Let me know down below. Okay, let's jump into the portfolio itself. You can see here that you actually get a different screen now because Vanguard have made some new designs, making things look a little bit fresher, a little bit new of an update. For new viewers, I have a very simple setup on Vanguard. It's just one of my many investing accounts. And all I have on Vanguard is my self-invested personal pension. So as I run a limited company, basically I put money in every single month from the company straight into my self-invested personal pension. I try and put in as much as I can. I would like to max out what you can put in a single calendar tax year. And I'm just trying to grow it to be as big as possible. I keep it really simple though. I'll go into that in a moment. What's funny on this new design that Vanguard have put together is actually, this is the only screen where the new design works. The moment I click out of this, it goes into a different one. So we'll just have a look now. You can see I've got two accounts there. I had an old stocks and shares ISA I used to use. That will eventually disappear and you'll just see the pension. So if I click into the pension itself, you can see the value is £122,968. It's amazing, of course, once you actually put in large sums of money, just how quickly the investment can grow. The biggest factor of the reason this account is actually growing is me putting money in, which I think is often a thing we skip sometimes when we talk about investing. Although I really encourage people to invest with smaller amounts of money and whatever you can, a big factor is how much you can put in. If you can put more in, of course, it's going to go up higher and look bigger. So 2 things I always cover off just in case new people are watching. I keep everything in a single global mutual fund. So it's this one here, the FTSE Global All Cap Index Fund. It's the accumulation version. You can see here with these green dots with every time I buy. I don't try and time the market. I go in as close to the first of every single month as I can. As soon as money hits my account and I do all my finances as my business, money gets put into the pension. It feels very good because it's so tax efficient that basically I see myself up immediately the moment I put money in. Such a great way to use money in your business. I could make an entire video about it. Maybe if you want to go into some more details, let me know in the comments section below. The reason I chose this, I want to have just a globally diversified index fund that owns almost every company in the world, small caps, mid caps, large caps, and I can just basically set and forget. As companies get bigger and smaller, I don't have to worry about that. As the global economy gets bigger, hopefully, but as it maybe contracts, I don't really care. I just leave the market to its pieces. And I have that well-diversified portfolio in basically every major market in the world. Nice and simple. With my pension, because I can't access it for another 20 plus years, I just want to keep it simple. And my main focus, and I think for most people, is really just trying to get as much money in as possible. I'm not trying to time the market. I'm not trying to get the right hottest stock. For my pension, I want to keep it super, super simple. Let me just go quickly as well into the transaction to show you exactly what I've just said there. On the first of the month, I try and put in about £4,000 at the moment. It is a lot of money. It's not comparable to putting money into an ISA. This is a lot of money, but it's purely because this is all my pension money. As an individual who's not employed by a company, I'm trying to put as much money in as I can. Many of you watching who will be employed will be putting money into a pension every single month. And most of you out there probably won't really know what it's being invested into. That's something I strongly encourage people to try and do. Figure out where your money is invested because it is your money at the end of the day. But for me, as I try and be tax efficient as a limited company director, I put as much money in as I can on the first of every month. And when it comes to the new tax year, I'll maybe put a little bit more in to see what I can do. Now, as I just bring up the monthly performance chart, which is always just nice to look at, but it's not really relevant when it comes to actually how I choose to invest. You can see here we've had a really great run basically since the tariff debacle back in April, and the cumulative returns are just been going up and up and up, and every month basically the account's been making money as well as the money going in. The lesson I wanted to come back for this, it really touches on a few of the news stories which you've heard earlier, is I think just how important it is to be well diversified. I have no idea right now if we're in the biggest AI bubble and how long this thing's last. I don't know if the dollar's going to get weaker, the pound's going to get stronger. When is the best time to sell and buy? All I do is focus on what's important. And for me, I think if you want to be a truly passive investor, if you leave the market to itself, the market can be crazy in the short term and probably crazy in some longer time periods. I don't care about any of that. I just focus on what I can control, which is trying to put as much money as I can, trying to be as frugal and deliberate with everything I spend, trying to make sure I'm in the strongest position to be able to invest money. Just invest what I can afford to invest. Don't stretch myself too much. Enjoying life today as well. Not got to pay for all the studio. Got to make sure I've got everything ready so I can have a nice little basement studio going on as well. And I think if you stay well diversified, that includes buying stocks from all the companies around the world, not just focusing on the S&P 500 or the big US ones, I think you'll probably end up doing pretty well. I don't really have an idea about that. I'm not a financial advisor. I can't give you financial advice, but if you keep things really, really simple, I think most people will do pretty well. It's always easier said than done. But I think with everything going on, with gold going up, with fears of a recession, fears of a pullback, and fears of all this bubble and all this nonsense, I just switch all of that off and just focus on what I can control. I think that's the most important thing, but I would always love your opinion as well in the comment section. I know most of you, at least a lot of you out there who watch the video, my regulars do this similar thing, just keep on snacking no matter what goes on. Because I truly do think lots of news and lots of these short-term things, although they're interesting, I think they really genuinely are totally irrelevant if you want to be a successful long-term investor. And that is the key thing here. I'm not trying to trade back and forth. We're just trying to be successful long-term investors, and long-term is, again, so easier said than done. We're talking decades here. It's very boring to sit back and just do the same thing every month and not actually get anything real or tangible from this and just see a number hopefully go up on screen. But that's why a lot of people, unfortunately, don't do very well with this. And I'm trying to help show my journey, and hopefully people can jump along as well and enjoy it. Anyway, I hope you've enjoyed this month's update. I will see you in the next one. As always, happy investing.